Are you thinking about buying or selling a home or are a real estate professional and want to keep up with the Twin Cities market news, stats, and trends? Then come hang out with us for a little while. Hi, I'm Kirk Duckwall, and welcome to the Twin Cities Real Estate Show. Today, we're going to do just a little bit of a grab bag of real estate myths, misconceptions, misnomers, as to things that we hear out there in the market. Like, hey, the market's going to crash. I tell you, I'm hearing more about. I see it all the time.
Me too.
Yes.
I think I saw a funny meme the other day. I think it was Tom Brady, and it was like showing like all the years in the different uniforms and how he just like doesn't age at all.
Yeah,
right.
yeah.
And it's like the home buyer waiting for the market to crash.
Right.
You're going to be waiting a while, I think.
You're
Yeah.
going to be waiting.
Right.
Yes. So even with the things that have been happening in our marketplace, we're not seeing the market really reacting a whole lot to that. And a lot of that has to do with our inventory, which we're going to talk about here. Diving into some of the stats, what's happening in the Twin Cities market currently. So new listings, like I had mentioned last week, jumped up by pretty much what we were thinking that it would. So it was at 1194 with new listings up to 1407, which was a nice little increase. However, not all that surprising. Coming out of Labor Day weekend, we saw the exact same jump last year in new listings, but pending sales fell off.
Right.
So, that's not too surprising, though, as well as, again, seasonally, that's what happened last year. So really you can't just sit there and go, oh, look, it's interest rates that's doing it. No, it's time of year more than anything.
Absolutely.
Right. So, we saw pending sales go from 997 down to 816. Now, in comparison to last year, we were at 1353 down to 1163. So, similar kind of movement there. Pending sales definitely tracking behind last year by 29%.
Wow.
So,
okay.
Our market is moving slower.
Yes.
And we can feel it out there for do you have any listings that have come on recently?
Yeah.
Yeah.
I have a few.
How's market time been?
Longer.
Yeah.
Yes.
Yeah. I think, I know I was speaking with a client and, a house that had been out for a few weeks. And I'm like, we're just coming up on average time on market.
Yes.
It's funny. And then we get an offer.
You're right.
Right. So that's the thing, is to make sure you're looking at it all in perspective. Just because your neighbor's house sold in multiple offers in March and you're on the market now doesn't mean you're going to have that exact same thing happen. Right. Our market really started to shift, it was late May.
Yes.
We really saw some massive movements.
That sounds right.
Yep.
Yeah. I don't mind this little bit of a slowdown. And like you said, Kirk, when you put it in perspective with the season, obviously we have things going on in the economy with interest rates and stuff, but it gives us more time to make a decision. Right? Mm-hmm. Rather than being that rush, and maybe you don't make the best decision whether you're selling or buying. So this allows us consumers to sit back and make a healthy decision rather than being in a rush.
Well, and talking about decisions, when we look at inventory of homes, even though the new listings were up and pending sales were down, we actually saw a drop in inventory. I think we're seeing a lot of sellers that are maybe deciding, hey, I'm just going to wait until next spring at this point.
Yeah.
Mm-hmm. Which we'll see where things are at. Interest rates will be a huge driving factor, I think we will still always see our boost in the spring market. Question is how much.
Right.
When we look at where our market meter is right now, we're at a 4.89. Still, again, ahead of where it was in 2019. And so, our market is still moving at a decent pace. Showings per listing, you're feeling it out there as a seller. It's definitely getting slower. 3.39. That's the average per week in our area for homes priced between $250,000 and $500,000. And for those above $500,000, you can expect that number to be even slower.
Right.
Now, a lot of it's area specific. You'll see,
right.
I had a house that I put on a few weeks ago, and multiple offers, 3 days sold.
Right.
And this is why getting appropriate expectations set up from the get-go is really important.
That is the key.
So you're not emotionally reacting to the market.
Right.
Right.
So I will say, I mean, I see listings out there that are dropping their price maybe faster than they need to be. You know, yeah, they had 5 showings, they didn't get an offer, and then immediately they're dropping their price. I mean, if you're beating the market average, why are you dropping your price? Wait until things maybe get a little bit slower.
Yeah.
That said, again, overpricing, don't want to do that. Interest rates. Let's talk a bit about this. Some pretty good movement upwards. Chad, I shouldn't use the word good.
Yeah.
Maybe. We saw movement upwards. We crossed the 6 barrier.
We did.
And so, yeah, fill us in.
Yeah, in mid-August it really started. We lost 300 basis points in August, and what that means, everybody, is we're up about a full % from early August in interest rates. So we talk about it a lot lately, the volatility.
This is like 100 basis points, about 1/3%. Somewhere
Roughly,
in there?
yeah.
Okay.
But, we hear the word volatility and uncertainty quite a bit right now, and that's real. There's a lot of uncertainty in our world. There's a lot of global markets that are affecting our market here in the U.S. So that being said, it's not to scare you, but it's to get you prepared to have a plan in place. As rates rise, there's programs and products out there that we're going to talk about, I think, a little bit later in the show.
Let's hit it right now in this segment. You told me about this yesterday on our mastermind call. The 2-1 program,
Yes. Yep.
rate reduction. I mean, I instantaneously put it into play on an offer because I thought it was amazing. So we got a couple minutes left in this segment. Why don't you fill us in a little bit on what that is?
Yeah, thank you. The 2-1 buy down is, so you have the par rate. Let's say the par rate today is 6.25.
Yep.
Your 2-1 buy down. So the first year your interest rate is going to be 2% less than the 6.25. So you're going to be at 4.25 for the first year. The second year you go to 5.25, and then the third year you go to that par rate at 6.25. The goal behind this program is that the market will correct itself. It's just a matter of when, but you're locked in at that lower rate for that time period. When the market corrects itself, ideally you may want to consider
And this
a
is very,
refinance.
very different than a 5-1 ARM, 7-1 ARM, 10-1 ARM, where the rate becomes adjustable after that period of time.
Correct. Very different. It is not an adjustable rate mortgage. It's a 30, 15-year fixed rate conventional mortgage.
Nice.
Yeah. So I think, when I was talking to you before the show, I'm like, this is kind of a win-win, right? So if rates are at 6.25,
right,
you're getting it for that first year, 4.25. Next
Correct.
year, 5.25. And we know that the worst case scenario is you come out of it and you're at 6.25. But if interest rates are higher than 6.25 out there at that moment, you're still at 6.25. It's not going up.
Correct.
Right? If rates are lower than 6.25, you just refinance back out of it to your more permanent mortgage. So
Correct.
It's a win-win. Also, that the fact that it is a rolled-in closing cost that has to be seller covered.
Correct.
To use that program. Obviously, you can do adjustments to the gross offer to accommodate that.
Correct.
But I don't see why in our rate condition that we're in, we wouldn't want to do something like this.
Yeah, it's a product that we want to be talking about, and it's maybe not for everybody, but affordability right now, as we know, is down, right?
Yep.
Prices are up, rates are up, affordability is down. This product is designed to give you an
know what else
affordable
is up?
payment.
This segment.
Oh.
We're going to have to go to commercial here.
That's a lot of fun.
We'll take a break. We'll be right back. Check us out online, TwinCitiesRealEstateShow.com. Be right back. Our local sponsors are BRIX Real Estate, Network Title, Eric Bloomstrad and Chad Priebe with Bell Bank Mortgage, Structure Tech Home Inspections, James Tufson with Country Financial, along with Cregan's Construction and Grey Duck Staging and Design.
Hi, I'm Ruben with Structure Tech Home Inspections. Everyone knows you should have a home inspection before you buy a home, but we've heard of home buyers being encouraged to skip the home inspection in this crazy market to make their purchase offer more attractive. Now they're facing tens of thousands of dollars in unexpected repairs. I'm telling you now, don't skip the home inspection. Here at Structure Tech, we can get your home inspected quickly, and we offer a full line of services. Visit us online at structuretech.com to learn more.
Don't fall for the billboards or the clickbait. There is no such thing as today's rate. Mortgages and mortgage rates are individual to you. Chad Priebe and Eric Bloomstrand with Bell Bank Mortgage are here to show you the formula to get your best rate. Once you know this formula, you can mortgage shop with confidence. Find us online at chadpriebe.com. That is chadpriebe.com. NMLS 1462493, Equal Housing Lender, member FDIC.
Hi, I'm Kirk Duckwall with BRIX Real Estate and the Twin Cities Real Estate Show. Buying or selling a home is one of the biggest financial transactions people make. Before you make your next move, download our free Smart Home Buyer or Smart Seller guides to give you the edge in our real estate market. From deal hunting to knowing the right repairs for maximizing value, these free guides have it all. Check them out and more at BRIXTwinCities.com under publications. Welcome back to the Twin Cities Real Estate Show. That last segment covering an awesome option out there for home buyers or people that are on the buy-sell. Definitely something you want to consider. As always, you can reach out to us. Any questions about what we just talked about? If you have just real estate questions in general, you can call direct 651-303-0019 or check us out, TwinCitiesRealEstateShow.com. Also, we have our Smart Home Buyer, Smart Seller Guide on there, as well as a whole bunch of other great resources. We have like the show we did a while back, Cure for the Common Rate. I wish this product was around when we did that show, but this is definitely something that you want to consider. If you missed the last segment, you can check us out, TwinCitiesRealEstateShow.com. You can see the last segment on there. Okay, so today we're going to deep dive here for a little bit into some myths, real estate myths out there. This is kind of the season a lot of people start thinking about, hey, do I want to sell this next spring? Do I want to sell and rent for a while? I know that's been a conversation I've heard from a lot of people starting to think about it. But you want to make sure you're going in with good, real information. Correct. And you and I had an experience with this, which is automated valuation models. Probably the most well-known of those is the Zestimate, right?
Yes.
And you were looking for a seller the other day, right?
Yes. And we were, the Zestimate was $30,000 higher than what the actual cost of the value is that we listed at.
Wow.
I mean, it's
a big number.
That is, yeah.
Well, and a lot of that is automated valuation models. It's looking at history, right? So it's looking at things that happened back in the spring, right? Yep. And so we're seeing these be very inaccurate right now.
Very inaccurate.
Now, one of the things that is interesting here is if you go and you type in Zestimate accuracy, you can actually pull up their accuracy for every major city. Mm-hmm. For off-market properties, which would have been what you were looking at that time, the accuracy is within 5%, only 46% of the time. The weather-man is more accurate than that.
That's
so
scary.
Be very careful about the data that you're getting on it, right? That you don't want to be sitting there planning your move based off of a number like this.
Right.
Is it a data point? Absolutely. But you want somebody that can go in and do a total market overview, right? Mm-hmm. Not just, you hear a lot of people throwing around, let me give you a market analysis, or let me pull some of these AVMs, throw you a quick price. No, the reason you want the whole market overview, so looking at what is the showing activity, what's the showing activity you can expect, what is the days on market, what's the showings to pending. All the things that are happening in the market will really kind of narrow in on truly where you're valued. Like with that property I mentioned that went into multiple offers, we knew that the showings per listing activity in that neighborhood was drastically higher than the Twin Cities average, which allowed us to play with that price a little bit and push it. Okay. So knowing having these data points is very important, and making sure that you're getting accurate data. Another one, closing costs. We mentioned in the last segment a product that utilizes closing costs. It came up in our mastermind. A lot of people, they hear this term, seller-paid closing costs.
Correct.
But at the end of the day, as we've discussed on the show before, the seller isn't stroking a check. They're not
Right.
sitting there going, "Here you go,"
Right.
and then the buyer's mortgage is less because of it. No, the mortgage gets grossed up, right?
Yes.
And the seller net can stay the same,
Correct.
right? And a good example is, and we talked about this on the phone yesterday, was that even in a scenario where the has to be quote unquote paid by seller, they can gross that up.
Correct.
And if they didn't want to, the seller could say no. And if somebody came in with a cash offer and said, "Hey, I'll pay you that exact same price," the net's equal.
It's the end. It's the end result is
Right.
the same.
The end
Right.
result is the same.
Correct.
So when you hear these terms, oh, they want me as the seller to pay those closing costs. No, what they're saying is they're rolling their closing costs into the financing. And as a seller, you need to, the reason you want to know that is because you may want to counter them, giving you a better net, not just accepting the fact that, oh, I have to pay these.
Right.
Correct.
You
That's a
want
good way to
now
paint the
maybe
picture.
the market condition is not strong enough to justify that. But again, these are conversations you want to be having with your real estate agent. You don't want to just throw dollars and cents away.
Right.
I hear that a lot. Coworkers, neighbors. I got the seller to pay my closing costs, and it's an education thing for people. But in the back of my mind, I'm like, no, actually, they didn't.
Right.
And it's like buying a car, you guys. Right? By the time
Tax title license, you want to put that into the loan or pay it cash out of pocket?
I use that scenario a lot with people to have them understand it.
Did the dealer pay the closing cost?
Correct. No,
You put it in your loan.
Yeah.
right.
Right?
It's just I think it's a misleading term that we use in our industry a lot. And unfortunately, there's still a lot of professionals in our industry that don't understand it.
I can play this game all the way down to zero.
Yeah.
Right. Like the example I love to give is you have a $100,000 condo and you ask the seller to quote unquote pay $3,000 in closing costs. Well, couldn't have you just offered the seller $97,000 and paid the closing costs yourself?
Right.
Net result to the seller is the same.
Right.
Right. Or a cash offer just comes in and says, "Hey, I'll pay 97." Right. And then somebody will go, "Yeah, but you started at 100. Okay, fine. What about I counter that offer back to 103 and then ask the seller to pay?" Like, it's all moving that net. And if you come in as a cash or come in without asking for it, it doesn't change that.
Correct.
Right? And then my favorite is you get the person, run into this in the classes a lot, well, no, I want to offer 97 and get the seller to pay the closing costs. Well, okay, well, couldn't have you then just offered 94 and paid them yourself?
Same
Right.
thing.
And that's kind of when it clicks.
Right.
Yeah.
You can do this all the way down to zero.
Correct.
Okay, moving on. I love this one that you brought up. So, do you have to have a closet in a bedroom for it to be a legal bedroom?
No, you do not.
No, you do not.
Okay.
Hey, I got an
to know.
interesting one. Do you need? This may throw people under the bus. I don't know. Do you need a egress window in a condo for it to be considered a bedroom?
Depending on what level.
Oh, now you're stumping me. Well, no, I think the one that the one that I sold was first floor. Yeah, do you have a piece of information on that? I don't know. So I know that you can have no, because I've sold a few on the seconds and thirds that were legal, and they didn't have the point of egress.
Right.
So, yeah, because when you are up on those other levels, it's not like you're jumping off.
You can't.
Right.
Yeah.
Exactly.
Right. So wait, you don't have to have a closet in the room for it to be a room marketed as a bedroom.
That is correct.
Okay, that's a new one for me too. I did not know that.
A lot of people.
Yeah, so that all came from a code in Minneapolis, a rental code
Oh wow.
that was around.
Yeah.
Yeah.
Look at this. This is awesome. Learning
We're all
every day.
learning stuff,
Yeah.
right?
Yeah.
Right. So it was a rental code. And a good example is you'll go into these Victorian homes, and a lot of Victorian homes weren't built with closets in the
Yeah.
rooms.
They had armoires.
Good to know.
Yeah.
I like that. I thought for sure you did. Don't tell my wife this because it's kind of been a funny joke going for years. I say no. I say you do, and she says no, you don't. And I said yes, you do.
I'm
in the
going to text.
industry, I know
I'm going to text
everything.
her on the next break.
Yeah.
She would like that actually. Yeah.
Yeah, I mean, the things that we hear is a point of egress. So for single family homes, needs an egress window.
Okay.
And then there's the 70 square foot thing that you'll hear. Again, it kind of goes back to a rental code more than anything. But even that rental, that closet thing, that was taken away. That was taken out of the rental code quite some time ago. So really it's that 70 square foot rule, and where you'll see agents that maybe get flagged is when it is smaller than that.
Yes.
And then it's not a bedroom.
Right.
Okay.
So here's a good one, that the less commission that a realtor charges a seller, the more money they will make.
False.
I wouldn't say that's true.
No, and it's very, very clear data on this.
Yeah.
When you look at, and it's averages, are you going to have certain situations where maybe the net was higher, but the averages, we see anywhere from about 8 to 14% less on a price per square foot basis for discount agents, discount companies.
That's a big number.
Yeah.
It is.
At the end of the day, you're losing a lot of money.
Yep.
Right.
But it kind of goes individually, right? I mean, not all of the discount brokers are that way.
No.
Kind of like you said, you average
the
it out.
overall
Right.
averages,
Right.
So you really want to look at what they are providing, a great example that I heard was, if somebody is charging less, they still have to pay the same payments typically for their office spaces, for their vehicles, for their lifestyle, which
Right.
means they have to take on more clients to do the same amount of dollars, which means they're spending less time on marketing and selling your home.
Right.
Yeah.
And typically they're spending less dollars on marketing and selling your home, which we see that net result. Some great information on this at TwinCitiesRealEstateShow.com. Under publications, the Smart Seller Guide breaks that all down and gives the sources of all of that information. We're going to take a quick commercial break. Got one last great one. Can save you a ton of money. We'll be right back.
Not every title company is the same. There are many people involved with each real estate transaction, and all of them need to be in the loop or a closing may get delayed. This is why the people at Network Title strive to provide swift scheduling and communication between the buyers, sellers, agents, and lenders. We know moving can be stressful, however, your closing does not need to be. Check us out online at network-title.com.
My name is James Tobson with Country Financial. Anyone can sell you insurance. However, is it going to be the insurance you need? When life pops up with its surprises, you want the right coverage. When it comes time to find or renew your policy, give me a call. I would love to review your existing policy and show you what I can do for you. You can email me at james.tobson@countryfinancial.com or give me a call at 651-365-3408.
Hi, I'm Becca, owner of Grey Duck Staging. With today's home buyers beginning their journey exclusively online, the look and feel of your home matters more than ever. Whether it's a simple in-home consultation, a refresh using your current furniture, or a whole home staging, our goal is always the same: showing your home in the best light and helping you achieve the highest sales price possible. To learn more, visit us at greyduckstaging.com or check us out on Instagram at greyduckstaging.
Welcome back to the Twin Cities Real Estate Show. If you are enjoying this show, check us out online, TwinCitiesRealEstateShow.com, where you can see all of our past shows, our market minutes, and all of that stuff on there as well. So yeah, during the break, we kind of got into a deep dive into this point of egress on interior bedrooms. I think we're going to do a little more researching because it sounds like there may be some city code around it. Then it came up regarding garden level units and what's required there. So I want to make sure we get you the accurate information on that piece. But yes, the closet piece, we know we got that one covered.
Yes.
So, okay, the last one I wanted to talk about today was term of mortgage.
Oh, nice.
That people out there, they rate shop and rate shop. But if you truly want to save a lot of money, if you are financially able to shorten up the term of your mortgage, even going to a 20-year, you can save $100,000 plus in interest.
Correct. Yeah, highly recommend talking about that with your lender.
Yeah.
Just looking at the payment option, because if it makes sense for you, with no doubt you go with that 20-year term. Now, if that doesn't make sense for you, there's other tools in play. You can do the bi-weekly payment or make that additional payment per year, and it shaves a lot of your term off on that 30-year mortgage. So there's other things that we want to be talking to you about that can do that, almost that same thing.
Yeah, I mean, and we're no longer in a rate environment where people are like, oh, it's free money.
Right.
You haven't heard that for a little while, right?
No.
Right? So, being interest conscious as to how much you're really paying in and how much you're paying down.
Correct.
Right? If you do a 20-year mortgage, you're there for 5 years, you're putting yourself in a way better equity position.
That's the key right there, everybody.
Yeah.
It's when you sell, and the amount of additional payments you put into it or that 20-year term is going to get you more proceeds when you sell.
Right. I mean, if it's something you can think about and weigh it out, talk to your financial advisor, is like, hey, I've been putting this towards savings. Well, you could be putting it towards your pay down.
Absolutely.
Right. And getting a home paid off quickly can put you in a nice position too. I mean, especially when you are talking a long-term or whatever residence.
Yeah.
Hey, you eliminate that mortgage payment. That's a nice little extra chunk in your pocket every month.
Yeah.
It
Plus
sure
the
is.
appreciation on your home is greater than what you're going to make in your savings account.
Right.
All day, every day.
Tremendously.
Yeah.
Well, like to thank both of you for coming in again. And, if you want more information on the things we're diving into, we cover a lot of these in the Smart Home Buyer and Smart Seller Guides, TwinCitiesRealEstateShow.com. Any real estate questions, 651-303-0019. See you next week. People always ask realtors, what is your commission? But what they should be asking is, what is your rate of return? Commissions only vary by a couple of % from agent to agent. However, the price per square foot you get just based on their experience and the quality of marketing they use can vary by 10% or more. At BRIX Real Estate, our agents use the right marketing and have the experience to get you top dollar for your house. See what we can do for you at BRIXTwinCities.com.
Not every title company is the same. There are many people involved with each real estate transaction, and all of them need to be in the loop or a closing may get delayed. This is why the people at Network Title strive to provide swift scheduling and communication between the buyers, sellers, agents, and lenders. We know moving can be stressful, however, your closing does not need to be. Check us out online at network-title.com.
Don't forget to check us out online anytime at TwinCitiesRealEstateShow.com. There you can find all of our past shows, our weekly market updates, along with the latest and greatest searching and researching tools, and our free publications, to include the Smart Home Buyer Guide and the Smart Seller Guide, along with the BRIX Report. All of these free for you. If you have any real estate questions, please feel free to give us a call, 651-303-0019. Again, 651-303-0019. Happy to help answer any of your real estate questions or assist with your real estate needs.